Hello guys, this is fairbinaryoptions.com. We are looking at the euro US dollar, and we have a bullish bias, or we are inclined towards the upside as per our previous analysis from this week and over the weekend. And of course, this is just coming to confirm our own analysis, the break higher that you can see here on the euro US dollar that is about to happen. Now let's put some letters on and numbers on the chart. Let's try to interpret things based on Elliott waves analysis. And like the name of this analysis suggests, we are looking to buy call options as the leg of a contracting triangle is most likely done. I would say that this is a leg of a contracting triangle that started with this highs here, so after that contracting triangle of a lower degree, so started there, and on the left side till the lows that we had yesterday to those lows, and from that moment on the leg of a contracting triangle ended, and this would be here. So on this area here, how I would label this one, I will label them A, B, C, X, and then A, B, C in the form of a complex corrective wave. This is being called a double. This is being called a double combination, and this double combination to be formed out of a zigzag and a flat. Basically, it looks like this. This to be wave A. Like this, followed by a B wave here, A, and a B wave here, so A, B, and C here. This would be the first correction, so that would be actually the first corrective wave A, B, C. Then we are looking for an X wave to the upside in a form of a flat. This X wave in a form of a flat comes in the form of an irregular flat labeled A, B, C, the irregular flat. And then of course we are looking for the same degree of a five-way structure. Now the five-way structure of the three-way structure, the three-way structure comes here with wave A, and then we have the B wave there. And then of course we have the C wave to the downside, and the C wave to the downside ends here with an impulsive move with a fifth wave failure is being called, and that impulsive move with a fifth wave failure should be labeled as this being wave 1 or the first wave, this being the second wave here, this being the third wave, this being the fourth wave, and then again remember what we're looking for. We are looking for a fifth wave extension, and the fifth wave extension to be the one that actually is done here. So 1, 2, 3, 4, 5, and therefore as of this moment we are looking for this whole structure here to be completed. I would say of a bigger degree, if you go on the bigger time frames and study the move, you will see that this ends here a B wave of a bigger degree, that means that the wave to the downside here is only a C wave of a bigger degree. And what we are looking now to the upside is a D wave that should go to the upside, and we should consider the fact that the D wave has a minimum requirement there. Basically it should go at least above the 50% level, now the 50% retracement level. Now the 50% retracement level, if you take a Fibonacci retracement from the highs here in wave B till the lows here in the C wave, 50% level, as you can see, comes 136.46. Now the market is 135 and 60, so way much higher. Therefore, the logical thing to do is to wait for to consider that this is a corrective wave, and this would be the minimum target to the upside. And therefore, I would like to buy call options, as this might be a corrective wave, labeled already the wave A, then the B wave, and now we are looking for a C wave. It remains to be seen what kind of a C wave it is. If it is a strong impulsive move that goes more than 161.8 when compared with the B wave there, it means that price most likely will form an elongated flat, so to have ABC and then an X and another ABC, but careful at these highs, okay? Or maybe this impulsive move will look that aggressive to the upside and will complete the D wave with only 3 waves, A, B, C, as the elongated flat usually appears as the entire leg of a contracting triangle or only part of a leg of a contracting triangle. It remains to be seen. Now, based on this analysis, I would like to buy call options like mentioned earlier, and of course I will not choose the expiration date end of day today, but will go end of week this week, as this is Wednesday, so by Friday I'm looking for higher values to for price to be at higher levels. So buying call options with end of week expiration date is what we're looking for here and what we are doing here. Remember, end of week implies Friday 21 GMT when the US markets are going to close, and that would be our expiration date. Thank you very much for being here. This is FairBinaryOptions.com, and our official sponsor is Lion Knife, so make sure you are checking lionknife.com.